This really the largest deal ever made? An analysis of Trump's Japan trade deal claim. On July 23, 2025, U.S. President Donald Trump announced a trade agreement with Japan, describing it as, perhaps the largest deal ever made. The deal, according to Trump, involves Japan investing $550 billion in the United States, with the U.S. receiving 90% of the profits, alongside a 15% reciprocal tariff on Japanese goods and expanded market access for U.S. products like cars, trucks, rice, and other agricultural goods. This announcement has sparked significant debate, with supporters hailing it as a historic economic achievement and skeptics questioning its feasibility and the veracity of its claims. This analysis compares Trump's deal to past trade agreements, such as the North American Free Trade Agreement, NAFTA, and the 2019 U.S.-Japan Trade Agreement, evaluates the feasibility of the $550 billion investment and the 90% profit claim, and examines the broader economic and political context. Overview of Trump's Japan trade deal claim. According to multiple sources, Trump's announcement on Truth Social and at a White House event outlined the following key components of the deal. Investment: Japan will invest $550 billion in the U.S., with the U.S. receiving 90% of the profits. Tariffs: a 15% reciprocal tariff will be imposed on Japanese goods entering the U.S., a reduction from a threatened 25% tariff set to take effect on August 1, 2025. Market access: Japan will open its markets to U.S. exports, including cars, trucks, rice, and other agricultural products. Job creation: the deal is expected to create hundreds of thousands of jobs in the U.S. Additional ventures: Trump hinted at a joint venture for a liquefied natural gas, LNG, project in Alaska, potentially related to the $44 billion Alaska LNG plan. Trump's claim that this is, perhaps the largest deal ever made, invites scrutiny, particularly when compared to landmark trade agreements like NAFTA and the 2019 U.S. Japan Trade Agreement. The lack of official documentation and specific details about the investment structure and profit-sharing mechanism further complicates the evaluation. Below, we compare the deal to historical precedents, assess its feasibility, and address the economic and political implications. Comparison to past trade deals. To determine whether Trump's deal is indeed the largest ever, we must compare it to significant trade agreements in terms of economic impact, trade volume, investment commitments, and geopolitical significance. Two relevant benchmarks are NAFTA, replaced by the United States-Mexico-Canada Agreement, or USMCA, in 2020, and the 2019 U.S.-Japan Trade Agreement. NAFTA, 1994, and USMCA, 2020. Overview. NAFTA, signed in 1994, NAFTA created a trilateral trade bloc between the U.S., Canada, and Mexico, eliminating most tariffs and trade barriers. It facilitated $1.2 trillion in annual trade by 2017, making it one of the largest trade agreements by trade volume. USMCA, signed in 2018 and effective in 2020, the USMCA modernized NAFTA, tightening rules of origin, e.g., requiring 75% of auto content to be North American, improving labor standards, and adding digital trade provisions. In 2024, U.S. trade with Canada and Mexico reached $1.8 trillion, according to the U.S. Census Bureau. Economic impact. Trade volume. NAFTA and USMCA govern trade among three major economies, with combined GDPs exceeding $25 trillion in 2024. The agreements cover a wide range of sectors, including automotive, agriculture, and manufacturing. Investment. NAFTA spurred significant foreign direct investment, FDI. For example, Mexico's FDI in the U.S. grew from $2.9 billion in 1993 to $54.5 billion by 2019. However, NAFTA did not involve specific investment pledges like Trump's Japan deal. Job creation, estimates vary, but NAFTA was credited with creating 5 million U.S. jobs by 2003, per the U.S. Chamber of Commerce. But also blamed for job losses in manufacturing, 700,000 by 2010, per the Economic Policy Institute. USMCA's impact on jobs is still being studied, with projections of 176,000 new U.S. jobs by 2025. Comparison to Trump's deal. Scale. Trump's claimed $550 billion investment is a specific financial commitment, unlike NAFTA or USMCA, which focused on tariff elimination and trade rules rather than direct investment pledges. If realized, $550 billion would exceed Japan's total FDI stock in the U.S., $721 billion in 2023, by a significant margin, making it a massive single-deal commitment. Trade volume. The U.S.-Japan trade relationship, valued at $228 billion in 2024, with $148 billion in Japanese exports and $80 billion in U.S. exports, is substantial but smaller than US's Canada-Mexico trade under USMCA, $1.8 trillion. The new deal's 15% tariff and market access provisions are narrower in scope than NAFTA's comprehensive tariff elimination. Job creation. Trump's claim of hundreds of thousands of jobs aligns with USMCA's projections but lacks specificity. NAFTA's broader economic integration likely had a larger long-term impact on employment. Profit sharing. The 90% profit claim is unprecedented in trade agreements like NAFTA or USMCA, which do not include profit-sharing mechanisms. Verdict. NAFTA and USMCA are larger in terms of trade volume and economic integration, but Trump's deal, if verified, could be considered larger in terms of a single investment commitment. However, the lack of clarity on the $550 billion and 90% profit terms makes direct comparison difficult. 2019 U.S.-Japan Trade Agreement. Overview. Signed in 2019 and effective in 2020, this agreement was a limited trade deal between the U.S. and Japan, focusing on agriculture, industrial goods, and digital trade. It reduced tariffs on $7.2 billion in U.S. agricultural exports, e.g., beef, pork, and wheat, and lowered Japanese tariffs on certain U.S. industrial goods. Japan gained better access to the U.S. market for auto parts and machinery. Economic impact. Trade volume. The 2019 deal covered $55 billion in bilateral trade, out of $218 billion total U.S.-Japan trade in 2019. It was narrower than a comprehensive free trade agreement, as it excluded autos and other sensitive sectors. Investment. The agreement did not include specific investment commitments, though Japan's FDI in the U.S. was $509 billion in 2019, driven by private sector decisions. Job creation. The U.S. Trade Representative estimated the deal would support 40,000 U.S. jobs, primarily in agriculture, a modest figure compared to Trump's 2025 claim. Comparison to Trump's deal. Scale. The $550 billion investment claim dwarfs the 2019 deal's scope, which focused on tariff reductions rather than investment pledges. The 2019 agreement's trade coverage, $55 billion, is also far smaller than the potential economic impact of $550 billion in new investment. Tariffs. The 2019 deal reduced tariffs on specific goods, while Trump's 2025 deal imposes a 15% tariff on all Japanese imports, a shift from liberalization to protectionism. Market access. Both deals emphasize U.S. agricultural exports, e.g., rice, and limited auto market access. However, the 2025 deal's broader claim of opening Japan's market to U.S. cars and trucks is ambitious, given Japan's historical resistance to automotive imports. Only 16,707 U.S. vehicles were imported in 2024. Profit sharing. The 90% profit claim is absent from the 2019 agreement, which focused on trade flows rather than profit allocation. Verdict. Trump's 2025 deal appears significantly larger in scale due to the $550 billion investment and broader tariff structure, but the 2019 agreement was more transparent and limited in scope. The feasibility of the 2025 deal's claims requires further scrutiny. Other notable trade deals. Trans-Pacific Partnership, TPP signed in 2016 but withdrawn by Trump in 2017, the TPP involved 12 Pacific Rim countries with a combined GDP of $28 trillion. It aimed to reduce tariffs and set trade standards, potentially covering $1.5 trillion in trade. Trump's Japan deal, while bilateral, claims a specific investment figure that rivals TPP's economic scope for a single country. U.S.-China Phase 1 deal, 2020. This deal committed China to purchase $200 billion in U.S. goods over 2 years. Trump's $550 billion claim exceeds this, but the Phase 1 deal was more concrete, with verifiable purchase commitments. Feasibility of the $550 billion investment. The claim that Japan will invest $550 billion in the U.S. is a cornerstone of Trump's announcement. To assess its feasibility, we must consider Japan's economic capacity, historical investment patterns, and the structure of the proposed investment. Japan's economic capacity. FDI history. Japan is the largest foreign investor in the U.S., with a total FDI stock of $721 billion in 2023, U.S. Bureau of Economic Analysis, and $1.2 trillion by the end of 2024, Bank of Japan. Annual FDI flows to North America were $137 billion in 2024. A $550 billion investment would represent a 76% increase over Japan's total U.S. FDI stock or 4 times its annual flow, an extraordinary commitment for a single deal. Economic context. Japan's GDP was $4.2 trillion in 2024, and its government faces fiscal constraints, with a public debt-to-GDP ratio of 252%, IMF, 2024. Committing $550 billion, equivalent to 13% of GDP, would require significant public and private sector coordination. Private sector role. Japanese Trade Minister Ryosuke Akazawa indicated the investment includes equity and loans to support Japanese businesses in sectors like pharmaceuticals and semiconductors. Companies like Toyota, Honda, and SoftBank have historically invested heavily in the U.S., but a $550 billion pledge would dwarf past efforts, e.g., SoftBank's $100 billion Vision Fund. Structure and timeline. Lack of details. Trump's announcement lacks specifics on the investment structure, e.g., direct investment, loans, or government guarantees, and timeline. Japanese officials suggested the investment involves government-backed loans and private equity, but no official documentation has been released. Precedents. The 2017 SoftBank pledge of $50 billion in U.S. investments, announced after a Trump meeting, was spread over several years and included projects like Sprint's network expansion. Scaling this to $550 billion would require unprecedented coordination among Japanese firms and government agencies. Feasibility concerns. Economists question the feasibility of mobilizing $550 billion quickly. Kazutaka Maeda of Meiji Yasuda Research Institute noted that the deal could help Japan avoid recession, but the scale is unprecedented and depends on private sector willingness. Japan's recent election losses for Prime Minister Shigeru Ishiba's party add political uncertainty, potentially complicating implementation. Market response. The announcement triggered a 3% surge in Japan's Nikkei 225 index, with Toyota, Honda, and Nissan shares rising 8 to 14%. This suggests investor confidence in tariff relief, from 25% to 15%, but not necessarily the investment figure. The yen strengthened slightly, indicating market stability but not overwhelming enthusiasm for the $550 billion claim. Verdict. A $550 billion investment is theoretically possible, given Japan's economic size and investment history, but it faces significant hurdles. Scale. The amount is plausible only over a decade or more, not as a single-year commitment. Coordination. It requires alignment between Japan's government, banks, and corporations, which is challenging amid political instability. Verification. Without official documentation, the claim remains speculative. Historical FDI patterns suggest a multi-year effort involving major firms like Toyota and SoftBank. Feasibility of the 90% profit claim. Trump's assertion that the U.S. will receive 90% of the profits from Japan's $550 billion investment is one of the most contentious aspects of the deal. This claim raises questions about its economic logic, legal structure, and historical precedent. Economic logic. Profit-sharing definition. Trump did not clarify how profits are defined, e.g., corporate profits, tax revenues, or economic benefits, or how the 90% share would be enforced. In international investment, profits typically accrue to the investing entity, e.g., Japanese firms, not the host country. FDI norms. Foreign direct investment usually involves companies retaining profits, with host countries benefiting through taxes, wages, and economic activity. For example, Japanese automakers in the U.S., e.g., Toyota's plants in Kentucky, generate profits for their parent companies, with the U.S. gaining jobs and tax revenue. A 90% profit transfer to the U.S. government or entities is unprecedented in FDI agreements. Economic impact. If the $550 billion generates a 5% annual return, typical for FDI, profits would be $27.5 billion annually. Allocating 90%, $24.75 billion, to the U.S. would require a novel legal mechanism, such as profit-sharing contracts or special taxes, which could deter Japanese investors. Legal and practical challenges. Bilateral agreements. Trade and investment agreements rarely include profit-sharing clauses. The U.S.-Japan Treaty of Friendship, Commerce, and Navigation, 1953. Ensures non-discriminatory treatment for investors, making a 90% profit clawback legally dubious. Japanese perspective. Prime Minister Ishiba and Trade Minister Akazawa have not confirmed the 90% profit claim, focusing instead on tariff reductions and investment commitments. This suggests the profit-sharing aspect may be a unilateral Trump assertion. Incentives. For Japan to agree to such terms, the U.S. would need to offer significant concessions, e.g., tariff exemptions or market access, but the deal's 15% tariff on Japanese goods contradicts this. Verdict. The 90% profit claim is highly infeasible. Economic precedent. No major trade or investment deal includes such a lopsided profit-sharing arrangement. Legal barriers. Enforcing profit repatriation would violate international investment norms and deter Japanese firms. Lack of confirmation. Japanese officials' silence on the profit-sharing claim suggests it may be rhetorical or exaggerated. Broader economic and political context. U.S.-Japan trade relations. Trade balance. In 2024, Japan exported $148 billion to the U.S., cars, auto parts, machinery, and imported $80 billion, oil, pharmaceuticals, aerospace, resulting in a $68 billion trade deficit for the U.S. Trump's focus on reciprocal tariffs aims to address this imbalance. Geopolitical alliance. The U.S. and Japan are close allies, with Japan hosting 54,000 U.S. troops and holding $1.1 trillion in U.S. Treasury securities. This leverage likely influenced Japan's willingness to negotiate. China factor. Trump's administration has pressured allies to reduce trade with China, Japan's top trading partner. The deal may reflect Japan's balancing act between U.S. demands and its economic ties with China. Tariff dynamics. Previous threats. Trump threatened a 25% tariff on Japanese goods starting August 1, 2025, after a 90-day pause on a 24% tariff imposed in April. The 15% tariff is a compromise, welcomed by Japanese automakers facing profit losses. Impact on automobiles, 28.3% of Japan's U.S. exports, are central to the deal. The tariff reduction to 15% from 25% boosted Japanese auto stocks, but U.S. automakers expressed concerns about competitive disadvantages compared to higher tariffs on Canada and Mexico, 25%. Political implications. Trump's narrative. The deal aligns with Trump's America First agenda, emphasizing job creation and trade deficit reduction. The largest deal ever claim bolsters his image ahead of the 2026 midterms. Ishiba's challenges. Japan's Prime Minister Ishiba faces domestic pressure after his party's election losses. The deal's tariff reduction is a political win, but the investment commitment may strain Japan's fiscal resources. Critical analysis of Trump's claim. Trump's assertion that this is, perhaps the largest deal ever made, hinges on the $550 billion investment and job creation potential. However, several factors undermine this claim. Lack of transparency. No official documentation has been released, and Japanese officials have been vague about the investment's details. Exaggeration risk. Trump's history of hyperbolic claims, e.g., calling the 2019 U.S.-Japan deal phenomenal, despite its limited scope, suggests the 2025 deal's scale may be overstated. Comparison to history. While the $550 billion figure is significant, trade agreements like NAFTA and TPP cover larger trade volumes and economies. The profit-sharing claim lacks precedent and credibility. Conclusion. Trump's Japan trade deal, announced on July 23, 2025, is a significant bilateral agreement but falls short of being the largest deal ever made when compared to NAFTA's $1.8 trillion trade volume or the TPP's multi-country scope. The $550 billion investment is theoretically feasible over a long term, given Japan's investment history, but its immediate implementation is questionable due to economic and political constraints. The 90% profit claim is economically and legally implausible, lacking confirmation from Japanese officials and contradicting standard FDI practices. While the deal reduces tariff tensions and boosts market access, its true impact depends on forthcoming details and execution. Skepticism on platforms like X and the absence of official documentation suggest caution in accepting Trump's claims at face value.